Next Dollar Liquidity Crisis by www.forexconspiracyreport.com. The man who accurately forecasted both the beginning and the worst of China's stock boom now predicts a financial crisis in China, and that crisis may spread across the globe. The crux of this argument is that when a nation does not have enough dollars, dollar liquidity, it is prone to an economic crisis. Bloomberg Business writes about crisis risks of the next dollar liquidity crisis. A shortage of dollars was a common feature in the oil rout in the 1970s, Latin American debt turmoil in the 1980s, the Asian currencies collapse in 1997, and the global crisis in 2008. Next year we'll see Federal Reserve interest rate increases, an improving U.S. current account balance, and a stronger greenback, putting strains on the most leveraged parts of the world's second largest economy. Historically, every time the U.S. current account improved, concurrent with dollar strength, some country somewhere in the world plunged into some sort of crisis, Hong said. The pressure from a Fed tightening and thus a dollar liquidity shortage scenario will more likely show up in Hong Kong property as well as China's online lending and high-yield corporate bonds, he said in an interview. While everyone expected the yuan, RMB, to continually increase against the U.S. dollar, borrowers preferred debt in U.S. dollars. Now that the yuan is on the verge of freefall, there is a shortage of dollars to pay off debt, the next dollar liquidity crisis. The flow of capital. Money flows to where risk is the least and profit is most likely. As China copes with a falling yuan, those with the cash are moving it out of China and into North America, the European Union, and Great Britain. The underlying concern is that China will be unable or unwilling to part with an unsustainable growth model of investment and exports. The Financial Times speculates on how China affects the global outlook for the next few years. Next year will provide conclusive evidence on whether plans to rebalance the economy towards consumption and continue with financial liberalization have gone out the window. If they have, China will pay a higher price later on for perpetuating a hugely costly misallocation of resources. The rest of the world also stands to pay a price. A malign external outcome of China's unsustainable growth model is that returns in many industries have been depressed because of the Chinese contribution to global excess capacity. That is an undermentioned factor in the low levels of investment by industry in the U.S. and much of Europe since the financial crisis. As the yuan falls and business gets worse in China, cash flows offshore, setting up the next dollar liquidity crisis. Where is the dollar heading? One of the aspects of a dollar liquidity crisis is that the dollar gets stronger. This has been the case for the last few years. However, now that the U.S. Federal Reserve has raised rates, it appears that the market had already priced in the rate increase. And since the Fed says that it will make other raises ever so slowly and carefully, there is a chance that the dollar will correct and not head a lot higher. Thus, the next dollar liquidity crisis, if it happens, will have to do with a shortage of cash in the nation at risk, and not so much with a strong U.S. dollar. For more insights and useful information about Forex markets and trading, visit www.forexconspiracyreport.com.